All right, this is what I'm talking about as we learn how to determine which way is it going. We saw the potential bounce here on the 15-second chart. And if we would have gotten in proper, we would have had a nice little run up to what? Well, what's the higher time charts doing? That's what we always have to ask ourselves. So price went all the way up to the fair value gap right there on the 60-minute. Let's check out the 15-minute, and went all the way up to the fair value gap on the 15-minute chart before turning around and turning around violently. So, yeah, like I said, yes, we might be able to catch a couple of things on the 1-minute chart and try to, you see this, this was disrespect. It was dissed right here. So that means, these are probably going to be respected when it comes up to this area for this fair value gap. If it creates a fair value gap here, I'm not sure how high that candle is going to go, but if it goes up past that, it can go up to the next fair value gap. Point is, which fair value gaps are being respected? Here's two of them to the upside that have been disrespected. And we have to find out which side matches the higher time charts. So as I'm exploring counter trend reversal, short-term scalping trades, I have to always be ready for this to happen right here. Boom, a slam down. That's why I can understand people just don't want to mess with it. It's too risky, and the probability is less. So why even take a counter trend trade? Why take a 15-second or 1-minute trade on a chart that could easily just find a reason to go to agree with the higher time charts? So I just wanted to make a note on that. Okay, when you got a choppy market at lunchtime, you'll see disrespect in both directions. I mean, what can we say here? You have this counter trend trade where the fair value gap was going up here, and then it came down disrespecting it, creating short fair value gaps that were disrespected just the same on the upside. A big whip right here at lunchtime. So, that's not exactly what I would say reliable price action in either direction. And it has to be the lunch hour. I mean, unless there's news that comes out at lunch I don't know about. But I just want, unless we're getting some kind of last minute sweep at the bottom here before it starts to go up a good bit, we could be seeing a breaker block created right here. And if it displaces way to the upside, let's take a look at the 15-minute chart. Let's say it displaces way up here, then it's probably maybe it's going to take out these highs right here in that area. It has displaced a little bit. Let's look at the 5-minute chart. You see, you were looking for a displacement, but it could just displace up into these fair value gaps and come right back down. So when it's this unsure, and a good place for it to displace to is this pivot right here. And that's exactly where a fair value gap is at. So I wouldn't be surprised if we couldn't get a small scalp in that area. Here's the fair value gap on a 30-minute chart right here. And you can see that it could go right up into that area. It's going to be interesting to see what happens here. It's got a ways to go up to the fair value gap on an hourly chart. All right, let's look at the 15-minute again here. It's inside a fair value gap right now on the 15-minute chart. It could easily reverse anytime right now if it wants to. You can't really rely on this choppy disrespect going on right here. There's nothing that I could say unless here it's displacing now, but only up to a point where it has failed before. All right, so that could be so that's a fair value gap right up there at the top on the minute chart. Here it is, and it's also on the 5-minute chart. Is it possible? And it's reaching the top part of the fair value gap on the 15-minute chart. So this is an area where it could definitely get a scalp for us. A scalp to the using the tip of that candle as a stop loss. I wish I didn't do that. I'm trying to see about this possible scalp right here. Let's see what we got here. That's what I'm saying.
Order filled.
Scalp it. Put your stop at the top part of it. As soon as we get a chance to break even, we're going to have to follow it down. There on break even. Break even. There we go. Follow it down. Follow it down. Follow it down. Follow it down. Follow it down.
Stub filled.
So I got all of that on a scalp right there. And I'm grateful that it worked out in my favor. I'm just saying, we entered in our trade. I was trying to enter in a little earlier than I did. I wanted to enter in up here, but I got in right here, and we followed that candle down right here. So how many points was that? I'm not really exactly sure. 17,502 to 17. Let's see here. 17,502 to 17,496. About 6 points. 6 points on that little scalp there. That was about 1 minute. I don't even know how long that trade took, to be honest with you. And it doesn't really matter if it keeps going up or not. It's where we decided to take the scalp at. We took the scalp in the trade right here where the fair value gap was, where it hit these pivots on the top side of that fair value gap. And it started to come back down. As soon as it starts to come back down, we try to get in. I really wanted to get in up higher using the tip of that, because if it comes down, you get in high enough, even if it shoots back up, you have a very small stop loss, very small stop loss. So I like that trade. But eventually one side cracks, and that means they stop disrespecting. You got disrespect on going on the upside, disrespect on the downside. Here we go with a strong displacement move to the upside with fair value gaps just sitting there. Will they be disrespected as well? Will we continue to get a choppy bullhorn type of expanded diagonal line as it whips to the bottom and whips to the top over and over, creating wider swings? Or will the fair value gap eventually hold in one direction or the other? That's the question that has yet to be seen. On the higher time charts, either way could happen. Why? Because we have swept a low. There's no other low for a long ways away. Here we go on the 4-hour chart. There's no other lows really until we get way, way, way down. And you'd have to go to the daily chart to see that. You know, you're talking about back in January, all the way over here. There's nothing for it to go for grabbing. So what's it more likely to do? Bounce here for a little bit, go up into the internals and collect some stop losses on the inside, which we could see on the hourly chart. Let's see it. There's a lot of highs right here that it can go up and grab. Let's take a look at this. Let's take a look at the 30-minute chart. At least this one here. It can go up here and grab these highs here before going down. Come up here and grab some of these highs. This is equal highs right here. I would assume these are going to be taken before any kind of a drop down to the bottom. It would have to on the daily chart, however, it would have to come up pretty high to get those. So in the next day or two, we could come up here and then rotate down if it's going to continue down in a couple of week process of grinding lower to come down to these pivots. I mean, it could slam down today. It could slam down tomorrow. It might not go down. It might come down in a couple of weeks on a slow grinding pattern. We don't know what it's going to do. The question is, which highs are going to be taken out first? Because eventually, either these lows are going to be taken out or these highs right here are going to be taken out. What is more likely to happen? That's the big question we all have to ask ourselves, and we all need to try to resolve to answer. Sometimes we just simply do not know. And so what do? We wait for price to develop to tell us what it's going to do. We watch all the different time charts to get hints and clues to try to piece together the reality of price direction. Okay. And right now, as I'm looking at everything, that's why I like to scalp, because it almost doesn't matter the big time frame. Let's say it's going to go down here next. There still may be plenty of bullish scalping opportunities that set up before it even gets down here. And like we just did, we just shorted that little scalp down, and now it's going right back over the top, right? What did it do? It bounced right here. If I was paying attention, the midway point of this fair value gap could have been another one of those scalping idea trades where we just watch the development of this pintail, watch the speed of it, watch the tickings. And as we get confidence that we can jump in, you jump in as low as possible, use that bottom of that pintail is our stop loss. And we could have done the same thing going this way that we did on this fair value gap going down, watching it tick in, watching it develop at the right time and jumping in. We could have done that here on this fair value gap, doing the same thing, and just practice that, getting better and better of scalping that kind of concept. I like that. I don't know. I'm very partial to that. And see something right here too. I want to make a point of timing the exact entry on a scalp is important. You want to get it before it hits resistance on higher time charts. So right here was the time to just jump in that fair value gap midway point and ride it up, because now that it's up here, right? That's the 1 minute chart. Take a look at the 15-minute chart. What does it get up into when it gets to the peak? Well, there's a fair value gap waiting right there. A point of reversal, 8 EMA. You don't want to try to take the trade right. I was thinking, should I just go for it right here as it breaks out over the top of this and use this little tiny fair value gap created right here? I'm not saying it won't work. I'm just saying we know right up above that on a higher time chart what's waiting, okay? And now it's disrespecting that fair value gap created right there at the high point. This is the one, right? That we should have taken. So what does that look like on the 15-minute chart? Well, price was way down here at that time. Price was right here. Somewhere, where was price? Where was price? Was it probably more? Yeah, okay. I got you. It was way down here. Okay, so it was really low. 1742. Let's take a look at that. 1742. There it is. That price, the time to enter that trade was right here, not up here. And that's something that I really want to get and understand better. Well, we can also see in the 30-minute chart that it's heading right to a fair value gap on the 30-minute chart, heading to one on the 15-minute chart. Even no matter how good it might look here with this, I don't want that trade. This is the one to take. And if we were going to try these down here, even though it didn't work, these that are lower are better. But what's great about this one here is that it did put in a breaker looking pattern, as what I'm seeing here. We go like this. It goes here, here, and sweeps down and then busts a move up here and creates this fair value gap that worked. So, you know, and I'm not saying that these higher time chart fair values are going to prove to be short. They certainly seem to be intimidating to the downside on every level. I mean, on every level. So I am very cautious. That doesn't mean they can't be disrespected. It doesn't mean we can't see that thing we were talking about where eventually it can go take these highs out first before coming back down to this low here. And what that would look like on the 4-hour chart is right here. Here's the lows that it could eventually come get, but that doesn't mean it's not going to come up here and sweep this first. It doesn't mean we're not going to see it rotate way up here, even all the way up here before coming back down here. So that's why we're always wondering which way it's going to go, but we have to follow what we're seeing here on every time